weekend all. Yes, it's going to be the weekend, and I'm Ira Epstein with your weekend edition of your agriculture update for this Thursday, and we are the 18th of April 2019, just around 1:30 in the afternoon. Yes, the stock market's still open at this point. You're going to be right around these prices in the metals. And in the ag markets, this is the settlement price. Remember, we are not open for Good Friday. So this is it until we get to the market next week. And when you look at the markets, while they're up a little bit here, the overall picture has still been one of a strong dollar weighing on these markets. No Chinese deal yet done. Pork prices did soar. We'll get to that in a minute here. As we take a look at a monthly area chart of closes, you can see how the market had one rally, has been unable to get over the monthly average of closes since literally the beginning of 2018, not 19, 18, and it has just stayed under that this whole time. On this particular chart, what we're looking at is the high that we made here in the 1070 range down to the 810 lows. A bounce carried the market, and this is a weekly chart on the Fibonacci, to the 38th percentile range, and from there the market is stalled. Now the question is it going to break down again? When we go to the weekly charts, and I use the swing line study, the pattern is one of lower highs and lower lows. That is the definition of a downtrend. To break that, you'd have to get back over 907 and a quarter. So right now the risk in being short is about 27 cents to break that pattern. That does not mean the trend would turn up. In fact, honestly, you can't turn the trend up, not on a weekly basis. The reason is this week's low already took out 2 weeks ago's low. Even if you soared, I don't care if you go to 940, 980. On 1 week, you'd still end up with a lower low and a higher high. Do you see what I'm getting at? So the downtrend stays in place. When we look at where the battleground has formed, I want you to look at the red number. That's the 18-week moving average of closes. As you can see, the market had broken under it, rallied back to it, broke again, rallied back, stuck there, and now we're getting the lowest low on this break. That is a sign that the market's attempting to break out to the downside now. So as I define it, the bias is down because the market's settled under the 18-week average of closes. The trend is down because you've got lower highs, lower lows. Where might support be? It's not going to be one of these key moving averages because they're above the market. Therefore, the Bollinger Band you put on the chart, and you see that you're knocking on the door of it. This week's low is 876.5. The Bollinger Band is 874.75. The question now is, can the market hit that band and push on it? In the past, when it's hit it, it's bounced away from it. So this is going to be an interesting test for the market. Also, momentum is down. Now, when I use the slow stochastic study on a weekly chart, I do not look to see if the market's overbought or oversold. I'm just looking for momentum. This momentum is down, the bias is down, the trend is down. The key is, will the pros take some money off against the lower Bollinger Band, and what do they do at that point? My guess is they will. That's number one. But now we'll find out if the market can press on that and break it out of the trading range. You've had a failure to the upside in the soy meal. If you take a look at your Bollinger Bands, keep in mind what they mean. A Bollinger Band is an algorithm designed to keep the market trading within it 95% of the time. The problem in understanding it is that the longer a market trades sideways within the band, it's like a spring in a pipe. It keeps winding and eventually it bursts out of there, be it to the upside or the downside. Do you get a series of false moves? Yeah, you can, right back and forth like you're seeing here, and that's why we're talking about the soybeans. Will this market be able to push on that move and make it break down or not? In the meal market, the next support level is 299.60. Momentum is down, bias is down. A warning sign for those wanting to be short would be taking out this week's high of 303. Why? Because we have an outside week down, and if you take out the high of an outside week the following week, or actually the week after that, you have 2 weeks, then I call that a bear trap. Now, what could happen, though, is if you first go down to the Bollinger Band, then I don't care what happens. You've hit a downside target. On the way up, The question would be, if you take out this week's high, do you make it back to the upper Bollinger Band? I think bears have grabbed control of this market. Soybean oil. We've had the pattern of lower highs, lower lows, and you're continuing with it. The bias is down as you've stayed under the 18-week average of closes. To negate the downtrend, you'd have to get back over 29.40. If the market decides to extend the break via maybe a breakdown in beans and meal, then you're putting into play the 27.38 level, the lower Bollinger Band. In the corn market, the trend is down. Lower highs, lower lows. Like we've been talking about in beans, when you get to these Bollinger Bands, the reason that they're so important is markets often try to bounce from them. When they hit the top side, they often try to come back down from them. See how that works? Well, again, it depends the formation. This is one that is trying to roll very gradually to the downside, extending the break. The real key is this low, just over the 350 area, and from here that's about 8.5 cents, because that takes out then that support zone and it puts back into play maybe the 335, 340 level. It'll be interesting to see what happens. I think the bears go home with control of the market. In the wheat market, bears have control. Lower highs, certainly lower lows. We don't know where this low will end up. Momentum, instead of being sideways like it was last week, has rolled to the downside as well. The resistance in this case hasn't been the 18-week average of closes. It's been the 100-week, as the market rallied up to it 3 times and failed against it. So now that puts into play that if the market builds on any momentum, 427, 428 level, the lower Bollinger Band, that's where the number is right now, comes into play. In the cocoa market, we still have the higher lows, we have the higher highs. This is the flip-flop of what we've been talking. Here's a market that rallied into the resistance levels, and you can see that right here. First time it hit it. Tried again, stalled a little bit this week. You were up 11 points on a close from the previous week. Now you're back down 44 points in there, as that has been the resistance. However, what's the trend? Up. Higher lows, higher highs. Support back at the 18-week average, and momentum still pointing up. In the sugar market, this is a market that's gone flat. And you can see it visually, just like this. It's sort of like the soybean market. You're stuck in this sideways action. Seasonally, this market often breaks down at this time of the year. The pattern is still one of lower highs, but suddenly I have higher lows. Do you see that? So I see a market that's narrowing in. I'm going to give the, if you will, the tip of the hat to the bear. The market closed 1276, which is, if you will, bias up because you're over the 18-week average. Trend may be down, and flat momentum. So I said give the tip of the hat to the bear? Nah. I don't think anybody gets the tip. Either way, I think you just got a neutral market. Coffee market, you got what, 13-year lows that you're making in this, and momentum is still locked in, still staying bearish. The market is respecting the Bollinger Band bottom. When you get down to it, you came down to it this week. This was back last week, April 12th, and now this week you're down another 20 points. So with all the big break you had, it's still staying within the bands, but there's nothing bullish. The trend is down, the bias is down, everything's pointing lower. A market that had a recent solid rally was the cotton market, and as you can see, it's running into the resistance at the 100-week average, and if I just step back here, you see the first challenges of it. If you continue, then you're looking for the Bollinger top. Still fighting the battle. You have one reach up here. You got as high as 79.31, 79.49 was the Bollinger top, and now the market has given that up. So sometimes you have to understand where the resistance is. You don't always reach for a Bollinger Band. You can miss it, but you already had one of the objectives, a higher moving average above the market. In the cattle market, I'm going to call this market void of a trend. You've got a higher high and a lower low. The battleground's the 18-week average. You've hit it now 3 weeks in a row. You've got momentum had been pointing down. You see it clearer right here. And now it's starting to roll a bit. So I'm calling the market fairly neutral. I think it turns more bearish if you take out last week's low of 125.07. What you have now is no swing line trend, support at 126.52. If you make a new low on the move, the question is, does the momentum go with it? In the hog market, a monster jump, 13% as Chinese purchases still in the market, and you're still seeing the power of that go on here. So you put it all together, interesting week. Now, let me tell you how I start off your day. At 6:30 in the morning approximately, I start recording a morning video for you. And in that video, I cover 45 different charts, 5 ETFs, and then 40 futures markets. And how I do that is I do them in a certain sequence, and the rationale being that if you've got your cup of coffee, whatever, and you're watching, you might not want to watch all these categories. You might want to go to the middle one, the interest rate futures. Just slide the recording right over that. I do it all in one recording because otherwise I'd have to render all these different ones. Doesn't make sense. Unlike what you see here, the first thing is I can throw out specific trade ideas, and believe me, I'm not bashful. The second thing, I go over not only what you're seeing here, but more. I use window envelopes, more moving averages. I really get into what these embedded stochastics mean in terms of the slow stochastic reading, and I teach. So it's the teaching, the throwing out of the trade ideas there that I cannot do on these videos we do here. I can talk here what the general trend of a market is. I can say because you're over the 18-day average or under it, what the bias is. But I'm able to say buy here, sell there, do this in these particular videos. So it's a way for you, if you've got an idea and you're looking for somebody else that does charting that maybe you respect, that's why you're watching these, give it a try. What are we talking about in dollars? Well, 26 cents a day. I don't think it's going to break anybody. $7.95 for the first 30 days, no contract. You decide if you want to go further. If you do, you can either get a 1-year subscription, $13 a month is what it annualizes out to be, or you can get it $15 a month and go go 30 days at a time. Your choice. You don't need a code. You don't need any of that. Just go to our website, www.iraepstein.com. Either go to the education or the research area. You'll see the drop-down menu, Ira's Morning Subscriber video. It explains it all. Sign up there. We'll get you right on it. I'm Ira Epstein. Have a great holiday weekend. I'll see everybody Monday.